Welcome to World Alert Updates. Subscribe and press the bell icon for more updates. October 1st, 2025. A date that will be remembered for decades to come. Global financial terminals flash red. Panic everywhere. The world's markets are gripped by a sense of dread as numbers tumble and alarms blare. In a move that shocks even seasoned analysts, Beijing dumps its last batch of US Treasuries, sending ripples through every major economy. Headlines scream, global markets in freefall as dollar plummets. Newsrooms scramble to keep up with the chaos, reporting on the unprecedented collapse. The unthinkable has happened. China, once America's top creditor, has fully divested from US government debt, leaving a gaping hole in the world's financial system. This isn't just a financial move, it's a seismic shift in global power, a realignment that will reshape alliances and rivalries for years. On trading floors from New York to Tokyo, seasoned traders stare in disbelief as the Dow plunges thousands of points before the opening bell. The sense of shock is palpable, with fortunes lost in minutes. The dollar collapses against every major currency, its value eroding with each passing hour. Its status as the world's reserve asset is in question, and central banks everywhere are scrambling to reassess their strategies. Central bankers scramble in emergency meetings, desperate to contain the fallout and prevent a total meltdown of the global system. For years, China's slow retreat from US Treasuries was dismissed as routine, a background hum in the world of finance. Now, the consequences are undeniable. Investors everywhere are forced to confront a new reality. The weaponization of finance has turned against its creator, and the tools once used for leverage now threaten the system itself. Ordinary citizens feel the tremors. Families everywhere brace for impact as uncertainty grows. Imported goods set to skyrocket, making everyday essentials suddenly unaffordable for millions. Interest rates on mortgages and loans are poised to soar, threatening homeownership and business growth alike. Countries holding vast US dollar reserves watch their wealth evaporate, their financial security slipping away. This is no longer an abstract crisis. It's hitting kitchen tables worldwide, changing lives overnight. The world holds its breath, waiting for the next shockwave, uncertain of what tomorrow will bring. The era of American financial dominance is under siege, its foundations shaken as never before. The global order is unraveling in real time, with every headline marking a new chapter in history. The question now, what comes next? The world waits, anxious and uncertain, for the answer. China's final sell-off marked the dramatic climax of a carefully orchestrated decade-long strategy to reshape its financial relationship with the United States. At its peak in 2013, China held over $1.3 trillion in US Treasuries, making it the single largest foreign creditor to the US government. This massive investment fueled America's deficits, kept interest rates low, and helped stabilize global markets for years. But by early 2024, China's holdings had dropped below $800 billion, a clear warning sign that the old order was changing. The pace accelerated in 2025, with Beijing offloading over $300 billion in just 6 months, sending shockwaves through global markets. No other country could absorb the sheer volume of bonds being sold. The market trembled under the pressure, and volatility soared. The final liquidation, about $400 billion, transformed a slow-moving trend into a full-blown crisis, rattling investors worldwide. China didn't dump everything at once, but instead executed a calculated, phased withdrawal. It let bonds mature, sold through intermediaries, and masked its moves with complex financial maneuvers to avoid panic. This created relentless, sustained selling pressure on US bonds, making it harder for the US to finance its debt. The Federal Reserve and Treasury scrambled for new buyers, but the pool was shrinking as confidence waned. Other central banks quietly followed China's lead, reducing their own exposure to US debt. By selling its last treasury, China severed a key financial artery between the world's two largest economies, signaling a new era. This was more than simple diversification. It was a deliberate, strategic decoupling from the US financial system. The message was unmistakable. China no longer trusts the dollar as a safe haven for its reserves. The era of unquestioned US financial dominance is over, and the world is adjusting to this new reality. The world is watching closely, and some nations are already following China's example. rethinking their own strategies. The balance of power has shifted, and the global financial landscape will never be the same. U.S. Treasuries are the bedrock of the global financial system, forming the foundation upon which trillions of dollars in global assets are built. For decades, they've been considered the world's risk-free asset, the primary reserve for central banks everywhere, trusted by governments and investors alike for their safety and liquidity. This immense demand let America borrow cheaply, funding everything from defense to social programs, infrastructure, and even emergency relief during crises. The system worked because the dollar was the world's trade currency, especially for oil and other vital commodities, making it indispensable in global commerce. Countries needed a safe place for their dollars, and treasuries were the obvious choice, providing stability in uncertain times. China's exit is a direct assault on this foundation, challenging the very system that has underpinned global finance for generations. Treasuries also set the benchmark for global borrowing costs, influencing everything from mortgage rates to corporate loans worldwide. When their value falls, yields rise, raising interest rates worldwide, and making it more expensive for everyone to borrow money. China's sell-off forces U.S. bond yields higher, making debt more expensive for everyone, from governments to everyday consumers. It's not just America's problem, it's a global shock that ripples through every economy, big or small. Companies, consumers, and governments everywhere now face higher borrowing costs, impacting investments, jobs, and growth. The Jenga tower of global finance is wobbling, its stability threatened by shifting trust and rising uncertainty. The world's trust in the U.S. financial system is shaken, raising questions about the future of global economic leadership. The pain will be felt far beyond Wall Street, reaching into homes, businesses, and communities around the world. China has pulled a foundational block, and now the entire structure is unstable, with cracks appearing in places once thought secure. The consequences are just beginning, and the full impact may take years to unfold. The world's financial order is at risk. The fallout is global, and the future remains uncertain for everyone. America's vulnerability is its staggering $40 trillion national debt, over 130% of GDP. For years, foreign investors eagerly bought U.S. debt, confident in its safety. But this dependence became America's Achilles heel. At the start of 2025, foreign entities held over $8 trillion in U.S. government debt. China and Japan were the largest, holding immense leverage. The idea of a creditor weaponizing its holdings was dismissed, until now. China called the bluff, betting that dethroning the dollar was worth the pain. The U.S. must constantly issue new bonds to pay off old ones and fund deficits. With China gone, the Treasury faces a catastrophic shortfall in buyers. Interest rates must rise to attract new lenders, straining the budget. Interest payments are set to explode, soon outpacing defense or Medicare. The government faces impossible choices: cut services, raise taxes, or print money, risking hyperinflation. The debt trap has snapped shut. There are no easy answers, only hard consequences. China's motives are strategic and economic. The U.S.'s use of financial sanctions, like freezing Russia's reserves, alarmed Beijing. Holding U.S. treasuries became a vulnerability. In a crisis, Washington could freeze China's assets. China's leadership decided to unwind this dependency, reclaiming monetary sovereignty. The goal: insulate China from U.S. financial coercion and promote the yuan globally. China has built alternatives like CEPs and pushed yuan trade with key partners. Economically, China saw U.S. debt and money printing as unsustainable. Treasuries became a depreciating asset. The sell-off is a vote of no confidence in America's future. Wall Street's chaos is Main Street's pain. Interest rates on mortgages, credit cards, and auto loans are soaring. The housing market has frozen. Homeownership is slipping out of reach. Small businesses face a credit crunch, leading to layoffs and hiring freezes. Inflation is roaring back as the dollar collapses. Imported goods and gasoline prices spike. Every American feels the squeeze at the supermarket and the gas pump. Retirement savings have been wiped out. Many must delay retirement. Economic anxiety and insecurity grip the nation. Trust in financial institutions and government is eroding. This is more than an economic crisis. It's a crisis of confidence. The American dream is under threat. The warnings were there, few listened, Financial leaders like Jamie Dimon and Mohammed El-Arian cautioned about soaring debt and over-reliance on foreign creditors. Bond market signals, rising term premiums, weakening demand, flashed red. The stock market's highs masked deep economic risks. Experts warned of a dangerous disconnect. Now, reality has caught up. Ray Dalio calls this the end of a long-term debt cycle and a shift in global order. History shows. Financial crisis precedes the fall of empires. The alarm bells are now deafening. China didn't just sell treasuries, it reallocated its reserves. Gold was the big winner. China's reserves are now the world's largest. China diversified into euros, German and French bonds, and strengthened ties with the EU. The pound and Swiss franc also saw inflows, giving China strategic footholds in key financial centers. Each asset serves a purpose: gold for trust, euros for scale, pounds for access, francs for safety. China's blueprint: build a resilient multipolar portfolio and show others how to de-risk from the dollar. The world is watching, and some are following. October 1st, 2025 marks more than a crisis. It's a global reset. The trust that upheld the dollar for 80 years is broken. The risk of holding US debt is now real. The safe haven era is over. Contagion spreads as other nations rush to de-dollarize, selling treasuries and shifting to gold, yuan, and euros. The world is fragmenting into competing currency blocks. Trade will be more complex, global commerce less smooth. The US faces a stark choice: restore fiscal discipline or slide into decline. Painful reforms are needed to regain trust. The twilight of the dollar is here. A new, uncertain order is dawning. The world will never be the same. The future is up for grabs.